Good afternoon and welcome to the Future of Finance. Today we will discuss why the case for regulating cryptocurrencies is becoming unanswerable. I shall now pass you over to Dominic Hobson and the panel. Thank you.
Hello everybody, I'm Dominic Hobson, co-founder of Future of Finance. Welcome to our webinar, How to Make the InsurTech Revolution Actually Happen. Like every financial services industry, insurance has attracted innovators armed with new technologies such as blockchain and AI. Their promise is an industry free of the negative stereotype of those endless variants of those old jokes about how accidents happen unless you have an accident insurance policy, what the big print gives, the small print takes away, and the only reliable thing about an insurance company is they never fail to collect the premium. And the innovators are right to assume that the insurance industry has a reputational problem. It also has fraud management problems, and like every financial services industry, a range of cost problems too, which technology and the data it produces and consumes can in principle do a lot to fix. So what is happening in the world of InsurTech? Which technologies are being adopted by which incumbents? And is the insurance industry making progress in making its customers as well as its shareholders happy? To discuss these questions with us, I'm joined by Meredith Barnes-Cook, who is Vice President, Industry Groups at Usher, providers of the world's first AI-powered customer experience automation platform that is enabling carriers to transform the customer experience by making it easier for customers, brokers, and others to connect to insurers through the digital channel of their choice for an improved customer satisfaction score, speed to value, and operating costs. Andrew Bennett is Global Insurance Director and CEO UK at Greater Than, a company whose stated mission is to make the roads safer and more sustainable by using data to make motor insurance better, fairer, and less energy intensive. Ed Gaze is an innovation expert who is now CEO and co-founder of Innovative Risk Labs, IRL, which is building a network of InsurTech startups, and which Ed joined from Lloyd's Lab, the innovation arm of Lloyd's of London, where his role was to identify promising InsurTechs, facilitate partnerships with them, and foster a culture of innovation. Craig John is Global Innovation Director, Davies Group, the professional services and technology firm that specializes in insurance and other regulated markets. Craig's role is to identify and commercialize disruptive and innovative technologies in partnership with clients. As always, in addition to our panelists, we also have you, our audience, and all five of us encourage everybody watching or listening to submit questions and comments throughout this webinar by using the Q&A functionality at the bottom of the Zoom screen. Rest assured, I won't be saving those up to the end, but we will endeavor to answer them as we go along, so you can be part of this conversation right from the get-go. Now, I'd like to begin by setting the scene. Insurance, like any industry, faces unlimited possibilities, but limited resources of time and money. To be in business is to choose. So what should it prioritize? And I'd like to identify what each of our panelists sees as the priorities. And then, before looking at those priorities in a bit more detail, ask what or which of those priorities Fintechs are aiming at, and indeed which technologies. Is it blockchain? Is it AI? Is it the cloud? Which they see as the most promising in terms of their impact on the industry. So to summarize, what are the priorities? Is it, I mean, every insurance company, like every company, is looking to increase its sales, increase its profits, break into new markets and so on. And maybe I could throw this at you first, Meredith. I'm sure you'd say making more money, making more sales is part of the agenda which insurance companies have. But what about the other things? Risk management. If you do that better, you can increase your insurance capacity. What about cutting operational costs? That's one way to increase your profit margins. And above all, that point I raised at the beginning about the reputational issue. How do you, as an insurance company, get closer to your customers, build better relationships with them, improve their experience? Meredith, what do you see as the priorities?
Yeah, I mean, obviously, everybody's trying to expand and write more business, but to your point, it needs to be profitable business. So it is, how do you keep getting better than your competitors, through both, true human expertise and technology to augment, to as quickly as possible discern the risk that you don't want versus the risk that you want, but you want to price it a little differently. So that's definitely a piece of the puzzle. But what we're really seeing, especially in the US, but I think it's pretty global and really specifically hitting hard on the personal auto side, is the OpEx side of things. The auto industry has been challenged for at least a decade now, because cars just aren't cars anymore. They're computers on wheels. There's no such thing as replacing a fender or a bumper. You know, you have to bring in the electrical engineer to hook up all the things. So you have that challenge that auto's been striving. How do you still be profitable and be competitive in a world where things are costing more? Now let's superimpose what's happened in the past 2.5 years, where we have a supply chain problem, which those more expensive parts are harder to find. And that veers over into the people challenge that's hitting every industry. The duration of repairs is now taking longer because repair shops too are struggling and getting employees, which is definitely in the insurance industry. The personnel, the people side of things is becoming an increasing problem. McKinsey just recently released a survey that showed that of the people who leave an insurance company job, 65% leave the industry altogether. At the same time, almost 500,000 experienced insurance industry veterans are getting ready to retirement. So you have this dilemma of the great resignation and the great retirement coming together. And truly technology in all of this has a role to play of how do you precisely improve it for risk management? How do you improve your customer experience by stop thinking about it as an insurance engagement and thinking about it as a service moment, like a retail journey? And then how do you understand that your your customers' expectations are the same expectations your employees have? And that's why they're leaving. They're leaving because they're still being asked to do things in a manual block and tackling way.
Mm-hmm. Right. So, Andrew, perhaps I could come to you next, partly because Meredith raised the question of the motor industry, but you made a very interesting point there about technology being capable of replacing people, but actually also lack of technology is driving people out of the industry because they don't want to work with legacy systems. Does that match your experience?
Yeah, I think very much so, to be honest. I think most insurance companies are sitting on some very heavy legacy systems, which they find difficult to integrate new technology into, whether that be a digital journey or be sort of risk management, etc. And I think, the existing system really of using proxy factors to basically assign risk is very difficult. I think pattern AI and certainly the cloud are probably two of the most innovative and probably the most worthy challenges, I think, to sort of the existing status quo at the moment. If you take a proxy risk, for example, what you're saying is that just because somebody lives where they live, they drive a particular car, they have a particular occupation of a certain age, they're going to drive in a certain way. And we all know that that's simply not true. So the minute you can use technology to stop doing those things, I guess the more satisfied customers are going to become, because the premium they get charged probably more reflects the risk that they actually present. And I think the counterbalance to that is, of course, that there's an argument where you end up with this toxic bucket of people that become uninsurable because they're, if you like, charged for how they drive. But the opportunity sits with all of us really within that world to actually change the way we drive. Because if you're being judged on static factors like where you live, where you work, what you drive, clearly you can't change those things. So I think we're giving everybody the opportunity, if you like. And I think those that take that opportunity will undoubtedly improve their premiums, but they'll also improve road safety as well. So I think, insurers want to invest in this. They want to embrace it. I think it's up to us in the tech community to enable them to be able to do it by, as I say, sort of moving more towards an evolution rather than a revolution, which they can take part in an evolution. They can't really take part in a revolution. So
if I was to try and squeeze you, Andrew, into my priority list here, you would say that adopting and adapting to these technologies could actually lead to improvements in risk management and indeed in customer engagement. Will it help the cost ratio as well?
Absolutely, because if you're using digital mechanisms to deal with your customers, because there's an assumption, I think, certainly within the old school industry that customers want to talk to people all of the time. No, they don't. Actually, what they want is a sensible resolution from the technology that they're using. So if that technology actually works and takes them to the end goal that they're actually looking for, then they don't necessarily want to interface face to face. So I think firstly you can save people time, which is a big sort of operational cost. But I think with regard to claims as well, let's face it, if we can identify poor risks, we can improve those poor risks, then ultimately there will be less accidents, and therefore there will be less need for auto repairs ultimately. You think about all of the AI that's now in vehicles as well, ADAS technologies, etc. I think we're moving more towards almost catastrophe type insurance, particularly as autonomous vehicles take more of a hold. So why shouldn't insurance truly reflect the risk that a vehicle or a person actually presents? And of course, operational costs are going to drop. And I think it's up to insurers really what they do with that. The more entrepreneurial will probably reduce the cost of that insurance so they can sell more of it. The less entrepreneurial will sweep it to the bottom line, and there are options, I guess, for people to take. But I think premiums will ultimately move down as this technology is adopted, and it will be a good thing for the world, because you have an opportunity now not to be put into a basket of a £2,000 premium just because you're a young driver, or a £300 premium because you're 60 years old. You could equally be as good or as bad as those people.
Craig, you've heard what Meredith and Andrew said. They've described for us a kind of virtuous circle in which you adopt technology, your cost ratio improves, your risk management improves, your customers get happier. Now, as you look at the InsurTechs trying to enter the industry, I don't know whether you've had the same experience as me. There seem to be an awful lot of them, all engaged in very different things. Some seem to be working very well. One thinks of Lemonade, for example, but others don't seem to be making much impact at all. So if I said to you, where do you think the InsurTechs that you think are going to, maybe which InsurTechs are making the biggest impact on the insurance industry from where you sit, and is that impact systemic, or is it very specific to particular pockets of the industry?
Yeah, I think I completely agree with the kind of barriers around the legacy systems, conflicting priorities, if you like, and sometimes organizations are certainly in the insurance industry, that they're highly acquisitive. They're constantly ever growing as a complex beast, if you like, inheriting multiple different systems. But I certainly agree that sometimes when InsurTechs try to kind of move into, if you like, an operating model as complex as that it does become quite difficult, if you like, for executives to look at how can that be positioned and what impact can it make. So I think also on that kind of customer engagement side of things is quite an important factor really, because we are people at the end of the day, and some of these complex operating models are very, very people human based, and it's kind of how we can start taking modern technology, if you like, which is over here, and kind of operating model and a legacy estate which is here, and kind of really work on that gap, which I label as adoptions, that human tech interface. So culturally, I think culture plays is a big part into kind of which ones are making the most impact, is really starting to understand that customer journey, starting to understand the bespoke nature of the organizations that they're trying to adapt to or evolve in, and starting to use data to get closer to that customer engagement, I think. So we have seen some major successes and use cases done very well, where they've really started on that customer cultural aspect and work the technology back from there, if you like, so shape technology to that. So, but when we're also landing the likes of AI or RPA, if you like, to look at those, solving those interoperability challenges between legacy systems, or being that kind of removing that human glue element, if you like, between business process and operations. Typically organizations who are going through that complex change seem to really kind of narrow the scope into like how can we deploy RPA in the back office to solve some sort of processes and challenges. So I think overall those barriers still exist, and it can be quite challenging to adopt the modern technology. So hence why it's been kind of done successfully, I feel, so far in pockets, if you like. There are obviously incredibly some good use cases out there, but InsurTechs at the moment are really hanging on to those big use cases and trying to massage those, if you like, into organizations.
Ed, you've been looking at InsurTechs for quite a while. You've just heard Craig talk about the difficulties of getting around legacy systems and very complex operational back office processes when you're looking to adopt technologies. And when I was thinking about this, I thought these fintechs are actually operating on a very broad front. They're trying to attack how insurance is distributed. They're trying to attack how insurance risks are assessed. The point Andrew made about you end up with this sort of poisonous bag of uninsurable risks because you are using genomics and you're using behavioral science and you're using telemetrics and dash cams and so on. But I also see quite a lot of focus, particularly by traditional tech companies, on cutting costs inside the insurance industry by really quite old-fashioned methods. And we've talked a lot, all three of your fellow panelists have talked a lot about the importance of the customer side. You just heard Craig say that, that's the place to start, and then you might have some success in overcoming legacy systems and processes. And I can see Meredith is itching to address this point, and we'll come to her in a second. But Ed, where do you see InsurTechs actually making a difference at the moment? Which fronts should they be pressing on to have a scalable impact?
Yeah, well, I think we call them InsurTechs, but a lot of InsurTechs, like the tech isn't really that important or that like game changing, to be honest. So if you think a lot of innovation that happens in insurance products is through MGAs or ARs in the UK, and really, I mean, the tech is not the greatest innovation. It's normally the distribution they've got and the policy innovation. So it's about coming up with a policy people actually want, and a policy that people understand, and a policy there where when they're in a difficult time, they know that they're going to get their insurance is going to back them up. And if we can inspire people with policies that actually deal with the challenges they're facing in life and that pay up quickly, efficiently, transparently, then you start to change the perception of insurance. And I think a lot of InsurTech is kind of not really, I mean, there is a bit of tech there and there's data for sure, but ultimately it's kind of like not really about the technology. It's more about the mindset and the policy, and ultimately it all goes into a binder, which then is it gets back into the archaic system of like the insurer doesn't know what it's written for a month, and is hidden in a load of Excel spreadsheets. But I mean, yeah, that needs to be solved, and ultimately we can reduce the cost, and more of the premium that the customer is paying is going to go back to claims, which would be fantastic to get to. But ultimately, like through the MGA model, we can still innovate a lot and get customers what they really want.
Now, Meredith, I know you'd like to say something here, and could I sort of prompt you by, there's a phrase Ed used there, provided we come up with the policy that people want. And the old joke is, of course, nobody wants an insurance policy. They kind of have to take it because the regulation or the law says they have to, or they have some risk. As Ed was if I present him more fairly, was describing, people do have risks they want to insure, and they want to be confident that the insurance policy is going to pay out when something goes wrong. But I'm getting clarity here. This is all about starting at the customer end, and then the technology, the processes, the legacy systems, you deal with them from that perspective.
Yeah, no, I completely agree. I think the insurance industry would do well to stop thinking that a customer or a prospect pivots their experience expectation because they're now having insurance interaction. Perhaps 10, 15 years ago, but now they don't. They come to the table, especially in this, as we're pushing more to digital experience or offering digital as a choice. It can't be like, I need to now filter and lower my expectations of the experience because this is an insurance journey. Keeping in mind that, as you said, an insurance purchase to some degree is a very reluctant buy. Even for the insurance that isn't mandated, it's like life insurance. It's a wise financial idea, absolutely, but no one is excited about spending all that money. And insurance has a real problem in terms of customer acquisition costs. So if you're not focusing on how you retain your customer, the insurance industry has like a 9 times the cost to retain CAC compared with overall industry average of 5. So they already have an OpEx problem there. The other piece of it, Andrew was talking about the risk mitigation and preventing, and preventing losses and better understanding drivers. The insurance industry is doing a great job, I do believe, in more and more fronts with technology, from telematics to geodata and all of that, to preventing losses or reducing their severity, which is fantastic. So the problem that insurance companies have is, you're doing a great job there, wonderful. How are you shifting to remind your customer why you're the best? I call them the did you know ... moments. They do surveys. They've done surveys the past 6 months, almost every line of business, be it from group benefits to homeowners to auto. People continually say, I don't really fully understand what I just bought. Get it? Insurance is a contract. Who understands contracts? And I would really like to hear from my insurance company throughout the year of what did I just purchase and how do I use it? And I think there is, when we talk about like that cross-sell, upsell journey, for example, people get so reluctant about that. And, it's like you have to engage it as not as a, hey, we want to sell you something, as opposed to we want to be sure you understand. For example, if you have a really profitable auto customer and you don't have their homeowners or renters business, it's an opportunity to say, we have discount packages if you do it. Do you own or rent? And in this current world, more people are moving from owning to renting. And a lot of renters don't understand necessarily, that's great. You don't have to insure structure. But if that place you live in gets flooded or goes up in smoke, if you don't have a renter's policy, you're in deep trouble. Your stuff is gone. If you don't have a personal replacement cost endorsement policy, even if you have insurance, if you take really good care of your stuff, the fully depreciated value may have come and gone and you're still going to get nothing. And so it's that opportunity to reach out and say, did you know ... to educate the customer, not only on what they have, but what else they could have. And they walk away feeling informed. Whether or not they purchase, their perception of the carrier overall elevates. And it's those little moments, these little micro engagements, these little moments that can unconsciously remind that customer why I'm with company X. So when renewal comes around and that auto renewal comes around, it doesn't feel like a transaction, an annual transaction. It feels like celebrating an anniversary. It feels like reinforcing a relationship.
I think it's about relevance though as well, Meredith. So if you take, talking about auto propositions and you think back to the pandemic, so we look at what we're looking at here, I suspect that neither of us actually travelled in a car today. I suspect Ed probably came from wherever he came on the train to his office, and I suspect the rest of us have probably got cars sitting on the drive at the moment. So, how relevant are the old propositions to today's market? Can we use technology to make those propositions relevant? For example, if my car is sitting out there for 3 days because I'm working from home, should I not be able to have, for example, a car-free day? And should my insurance company not compensate me for the fact that I'm not at risk on those 3 days because the car sits on the drive? If I'm driving much fewer miles than I used to drive and I'm driving on safer roads, should I not be compensated for that? And I think, once again, it comes all back to this 12-month cycle. Why should I have to wait 12 months to, change my insurance premium? Why, in theory, shouldn't it change every month? Now, you can parameterize that to make it affordable for the individual, but, you can do lots of things to encourage people to reduce their risk and ultimately be safer, but allow them to save money. And then I think the other argument, of course, comes from the eco lobby. And I think, there's a lot to be said for, if you like, insurance companies really looking at, the ecology actually of insurance and car use. And not only are you necessarily therefore giving people money back if they're not using their vehicle, you also promote them for using less CO2. And I think digital insurance using AI, machine learning, pattern AI, which we use, I think allows insurance companies to construct those sorts of propositions very, very quickly within sort of existing legacy parameters, and if you like, modernize what they do. And here in the UK, there are some fantastic examples that are already happening of that. Vitality does these things already, and it uses these sorts of technologies to be able to do it. We work with several customers across the States and in Southeast Asia that are doing exactly this. And it's just about waking up the industry really and saying, look, we don't have to do it this way. Your system can cope. We can make this fairer and better for customers.
And do you feel, Andrew, that it's got to the point that we can hyper-personalize, we can get that course? Because it is all about that cultural alignment to what's right for that person at the right time. And I think that's what's going to reduce the friction, in my opinion, of is this a transaction? Is this something I need or want? So, if eco, as an example, is important to that person, then let's underwrite the policies and provide the service based on that. How can we be flexible and dynamic and personalize that experience? Do you feel like it's there yet? What's the journey to get to that point?
I think it's coming. And I think, if I'm being really, really honest, what caused that change? I think it's probably 60-70% pandemic and sort of 30%, if you like, what's going on in the industry. And I think as digital innovators, we've got to jump on the back of those changes in lifestyle and make our products very relevant to our customers moving forward. And that could easily fit into household as it does into auto insurance, but auto is kind of where we are at the moment. I think that's the first step. And then you look at the way people use cars. Now, wouldn't it be wonderful if you've actually got a car sitting on your drive and there's 3 other people out there that might want to use that car on the day you're not using it? And is there a way that you can actually monitor how they use that vehicle, make sure they pay for the risk that they present and the miles that they drive in that vehicle? Well, yes, of course there is, because if you're using AI, GPS data, all of those things are absolutely 100% possible now today. So I think it's just about the market almost waking up a little bit, grasping the opportunity and giving those customers a chance to interact with us. Because we're talking about, well, we only ever hear from these customers once a year when the renewal comes through. Well, that's because we've got nothing to say. But if we turn it around and we're interacting with customers, giving them all these wonderful opportunities to decrease premium, become safer, become more eco-friendly, then they're going to engage with these propositions far more than they do today.
I like.
Sorry, Meredith, go ahead.
I was going to say, I like what you're saying, Andrew, because telematics, for example, has really been around for a long, long time. And so to the concept, I talk with my son a lot. He gets to hear all about my insurance perspective when we take walks in the evening. He owns a Tesla, so we get a lot into this, data privacy. And I think the challenge has been the insurance industry hasn't figured out, again, how to have a conversation with a customer, at that stop talking as an insurance company, engage on the what's in it for me factor. Like to the point, question you were asking, Craig, about personalization. Find what's important to me, and then give me a reason to give up that privacy. Give me a reason to let you into the black box of my car that resonates to me. That to me at a personal level, and in non-font size 4, make me really trust that you are not going to go and sell my data elsewhere. In the United States, I was stunned to learn a few years ago that several of our state-based departments of motor vehicles sell the data to all these other vendors. And I'm like, I so do not remember saying that was okay. And somewhere in a box that I clicked to renew my license or my registration, there must have been super uber fine print. And so it's like, whoop, trust level, it's just crashed to the floor. And now I'm backing up. So I think the insurance industry has a real opportunity to really simplify and streamline how they engage, take the insurance geek speak out of it, to get people to do what we from a social policy want people to do, which is drive more safely.
Yeah, we've just got to make it more relevant for people. If you think about, you mentioned the word black box there, and quite frankly, within personal lines insurance, in fleet, obviously you use black boxes for very different purposes other than just purely risk scoring. But I think, in a personal lines perspective, you don't need a black box anymore. You can use a mobile phone with GPS data, and you can assess risk. And that app on a phone linked to the Bluetooth in a vehicle can cost £1, €1, $1 a month. It's just not expensive within a proposition. So all of a sudden, if you like, those £50 to £100 bills that you were paying for black boxes and connectivity, it's all gone. So you're looking at a £12 to £18 trade-off basically every year just to get that risk assessment. And the one thing you're doing then, of course, is using something that every customer pretty much has, which is a smartphone, to then interact with them. So you're then, if you like, part of whatever else they're doing. You're not just sort of sitting out there on your own as a sort of archaic insurance company, if you like.
Ed, what I'm hearing here, and I'm glad this has been brought up by both Andrew and Meredith and by Craig, is this question of data. And Meredith referred to that abuse, if you like, of data in the United States. We've had similar episodes here in the United Kingdom as well. So the industry has a problem with data, yet at the same time, it is an industry which has always relied upon data to price risks and so on. And here it is presented with a solution to the problem we've identified here, which is, how do you get close to the customer? How do you engage them better? How do you make yourself appear as the provider they want to stay with? What is this customer engagement? Data must be the key to that. As you look across the landscape of companies you work with, the InsurTechs you're seeing, how well understood is that and how much progress is being made?
I mean, so many InsurTechs exist because of the data that they have and they bring to the table, particularly kind of like affinity plays where somebody understands the customer better than anyone else. They have nothing to do with insurance, but because they understand the customer so well, they've got the distribution, they can add insurance on. But then you need the thing I said earlier about the actual policy innovation as well to make it work. Something that Meredith said earlier, I just wanted to pull up, you said about the insurance geek speak. And when it comes to this kind of stuff, that not only for the customer, but for innovation and InsurTechs, it's a systemic issue in insurance and it's preventing innovation to an extent. So I joined insurance 4 years ago, didn't know what an MGA was. And I found so many people try to come and innovate in insurance and they get stymied by the language that people use. And so that is a problem for the customers understanding what they're getting, understanding the policies, and it's also an issue for people who are trying to disrupt or improve the insurance industry. So sorry, just a tangent to go back to what Meredith said back then, kind of geek speak, insurance geek speak is a big thing, I think. But yeah, in terms of data, it's massive. I think one thing we could do a lot better with data is also kind of have better sharing of data with the right controls, but sharing of data when it comes to claims and fraud and things
between
like this.
Companies, you mean? Between insurance companies?
Yeah. I mean, we've obviously got to think about how we can do that in a kind of GDPR world. But if we want to improve the service we're getting, customers are getting, one thing that can do that is if we know the customer better and trust them better, and if there's some you talk about blockchain at the very start, so about technology, maybe that could be a use of blockchain where you can query people without knowing anything other than answering your question, not knowing what any other details about someone, but saying, helping you identify instances of fraud, and using that as a way of, I say getting to know the customer better. You don't necessarily have to know ins and outs, but it can just help you be a better insurance provider to honest, proper customers. And if you can get rid of fraud, which is huge. I mean, I'm not really an expert in motor insurance, but there's been a lot of talk of motor insurance. But fraud in motor insurance is enormous. And if we can kind of use data to help tackle that, then immediately there's a lot of money spare to spend on improving other things.
Yeah, I think it's that trust element again. If people understand the reason why they're kind of, providing that data in a bit more of a across the network way, so securely, secure models, if you like, that we can share, drop the boundaries of each organization. We're going to drive up that personalization. We're going to give them a better experience. We're going to increase the trust, and they're less likely to kind of want to kind of be fraudulent. I completely agree as well that the jargon used in this industry is complicated. I've never read through one. I've always kind of pressed the button and just gone with it. And I think that is just kind of what people do these days. So I like the point of, how can we gamify that engagement to allow people to kind of scenario test actually what they have bought, and so if this happened to me, what would I get, and what the experience would be. And I think that you get a lot more engagement in that sense, and people could understand that they've bought in line with what their comfort risks are and what their risk levels are in that sense. So it comes down to trust and alignment and culture for me, and improving that engagement through personalization.
Craig, what you brought up the question here of getting, and Meredith brought it up as well, how you get customer consent to share their data, which is a sort of GDPR world. In other industries which we talk to at Future of Finance, they're very interested in a kind of federated approach in which they can actually access the data but never know who that data belong to. So that's one approach which Ed was, I think, hinting at in his remarks. But maybe there's a different approach here, which is that you arrive at a world where the consumers own their data, and you work with those consumers to prove to them that actually if they share aspects of their data with you, they get a better price and a better product. How are you seeing the industry thinking that way? Trying to turn it on its head?
Yeah, I think it's huge investment. Investors are getting younger, they're getting bolder, if you like. They're all looking for the next big thing. they're getting richer in that sense, and organizations are looking to make sure that they don't lose out, if you like. So the likes of the metaverse, kind of the likes of Web3 technology now, how people can start being in more control and more connected, if you like. And then, there's been a lot of conversation. I did a webinar yesterday on the human tech interface, and again, trying to close that gap to become interdependent, if you like, of human and machine. It's quite interesting how products and services and legacy industries, if you like, need to start thinking about how they can shape the service, if you like, to the person through a single interface, rather than multiple different apps on your phone, if you like, for lots of different products. So I think it's going to be super interesting, really, how that kind of digital fabric will all kind of interconnect and weave around the person and shape around the person versus the other way around. So I know I'm talking kind of out there, blue sky, if you like, but there's a huge investment at the moment. Organizations are certainly thinking about how can they exist in a virtual world? How do their business models need to adapt to a mixed reality world? How are we going to be relevant, if you like, in the next 5 to 10 years? And the likes of data, AI, Web3, metaverse, those kind of things are super hot topics in my experience.
Yeah, that's interesting, Craig, because, kind of the flash forward back, I guess, in terms of where we are in the insurance industry, we're having conversations. Imagine if your customer could have the same experience regardless of what line of business they're interacting with you about. Imagine if it was one door in, regardless of them changing a policy, paying a bill, or reporting a claim. That's future state today, everybody. Imagine that in a retail context. I'd be calling my credit card company and putting the card on hold if I dealt with a retailer where I felt that fraction, all that fraction stuff and everything kind of breaking apart, because I would worry that there's fraud in play. And I would be very frustrated of not feeling one continuous journey. So it's separating the front end, what your customers see, from the back end of what is. Because the multi-systems, multi-ecosystems, sub-ecosystems, I always say, like, the more of the spaghettiware, probably the more successful the carrier has been, because they've grown through a lot of really savvy acquisitions and expanded their distribution channels and lines of business. And that's phenomenal, except you've got your customer can't see and feel it. I literally had customer experiences getting turned upside down as a byproduct of one of our customers acquired one of our other ones. And then all of a sudden flipped them from one back end to another. And they're like, what happened? And I knew exactly what happened, but I'm like, how do you explain that?
Yeah, absolutely right. I think it eventually gets to a state of that we're constantly chasing that social expectation, and that's ever evolving. Someone mentioned evolution, which I think is bang on, that it's constantly evolving. And I think that's that for me. COVID is a one major reason for why to transform a business or digital transformation. But I think the number one has always been just the changes in behavior in society. And I think as technology progresses in the likes of Amazon and Google and things like that, that will just become the new expectation of the insurance industry, as an example. So it's super, super tough to try and provide the Amazon world whilst you have this digital noose around your neck of a legacy estate and acquisitions and fragment, if you like. So that's absolutely the challenge and the focus. I agree.
Andrew, is there an opportunity here for a data hungry industry like insurance to pioneer data ownership by customers? In other words, put a proposition to customers saying, if you agree to share, I don't know what this means in practice, and perhaps you have a better idea than I do, but let's imagine consumers start to own their data in some kind of digital wallet. And the insurance company comes along and says, I'd like to see A, B, and C out of your digital wallet. And as a result of that, I will be able to price a motor insurance policy for you or a life policy for you. So all sorts of data could go into those calculations. Do you think that opportunity exists for the industry? And if it does, how well placed do you think the industry is actually to seize it and exploit it?
I think to an extent, it already happens in certain savvy fleet operators, so fleet TSP, telematic service providers, are starting to do this, in so much as they've obviously got data, 1 second data, which they're probably using to manage risk with regard to a fleet. They're managing logistics, but they're also talking about things like tyre wear, servicing, all of those other aspects, if you like, that relate to, driving a car, driving, auto insurance. And I think if that starts to permeate through into personal lines insurance, then I think we get real and customer engagement. And of course, what we're doing is using their data for other purposes, I guess, than just managing risk. But we are actually providing a service. We're bulking up discounts, if you like, that they could basically earn as part of a rewards package. I think the other thing as well is if you think about the communication strategy for this sorts of thing as well, and particularly with data, we don't need to just put another app on the phone every time something different comes along. What we can actually use are things like SDKs to basically just link propositions into one app. So everything's there. So it's just a tile within the app, so the insurance tile, the tire tile, whatever the affinity is, and it basically all works nice and seamlessly. So I think data and using it more sensibly, providing we're using it with the customer's permission, I think there's infinite possibilities around those types of integrated propositions. There's just so much we can do with AI to make customers' lives much easier. If you pull into a car park, for example, we know you're in that car park, so why aren't we actually paying the car parking for you? Tolling, for example, you go over the Dartford Bridge or you go through a toll in the States or whatever. Why aren't insurance companies actually paying that for the customer as well and negotiating a block discount with somebody to get a cheaper thing? It's all about using these connected technologies linked to insurance and digital insurance, more importantly, to do things differently for customers. And the one person or the company that comes up with a proposition that starts to do all of those things, albeit as part of evolution, not revolution, will be the one that ultimately wins, I think. And there's a lot of older traditional companies out there who, hopefully will, but may not make the journey.
Ed, we've talked about data mainly up to this point as improving the customer experience. With some very off-the-wall ideas there from Andrew as to how insurance companies could start to work with their customers to improve the prices they pay across a whole range of activities because they know what they're up to. But what about the impact on the insurance company itself internally? Meredith said at the outset, lots of people are leaving the industry because they don't want to work with old-fashioned tech. And what immediately popped into my mind there was the customer filling in a form, faxing it across to the insurance company to look at, and then somebody keying it into a database. And I can see why that's not a great industry to work in. Do you see signs, Ed, that the industry is looking to capture data for its own operational cost purposes as opposed to improving the customer experience?
Yeah, so I'll talk from the perspective of the Lloyd's market, and there's a lot of inefficiency and a lot of manual keying of data and a lot of repetition in it, and yeah, that frustrates people. So, but it also causes some innovation. So, for example, there was an underwriter, junior underwriter, one of the Lloyd's syndicates, and her job, along with all the others, as they kind of go through their kind of apprenticeship, so to speak, of being an underwriter, would be getting schedules of properties, of US properties, like hundreds or thousands of them, and the data comes from the broker in a state that's not very useful, and data in the wrong fields, in the wrong formats, all that kind of stuff, and they would spend a good chunk of their time just going through these and remedying them. And it's not just them doing it in that syndicate. All the other syndicates that are looking at this do exactly the same thing on exactly the same data before they can put it into modeling tools to really model and understand the risk. What's the cat risk of this property? And it's just so inefficient. But then the example I'm thinking of, she thought, well, this is rubbish. There should be a better way, and set up a startup called Scrub AI to go and solve that problem. So there are these kind of problems, and it is causing some of the more innovative and entrepreneurial people in the industry to try and solve them. There are industry-wide things that they're trying to do to solve this kind of stuff. There's things like the core data record that Lloyd's trying to put in. There's Accord data standards. There's the MRC market reform contract, and there's all these things going on. But it's really tough because there's a number of different players involved. Like the brokers are very influential. They bring the business in. They have the customer relationship. They've got their ways of doing things. There's the Lloyd's way of doing things. There's it's trying to solve the problem for the kind of specialty insurance market is a huge thing to address. It's not easy. I wouldn't want to be trying to do it, I've got to be honest. But there is a lot in there, and I can see why people would get frustrated, and I can see why that could, put people off their jobs if a chunk of their work is actually just admin.
And if
Very
I could
dull
toss
admin.
in, a different way of thinking about data, a lot of the insurance interactions are the insurance carrier reaching out to the customer, to the agent, to the broker for information. It happens across the board. It's a lot of high volume critical outreaches. And for example, we had one customer for disability claims was trying to get just one piece of information from employees, which was the return to work date. And they were doing it by phone. And it was taking them up to 6 calls and up to 3 weeks to actually connect with the person, lots of voicemail tag. They were about 600, 700,000 calls a year were occurring to do this. Each call cost saved me about $15 US each. They pushed out an SMS message to the employee. 85% of the people opted in to engage in that conversation. 90% responded in an hour, 50% responded in 5 minutes. That one interaction is saving that carrier from an OpEx and employee engagement, but from an OpEx perspective, millions of dollars, and reducing the risk of overpayments, compliance on late payment issues, all those types of things, by also thinking about the small. The data challenge, absolutely, as I described, it's huge, and there's great opportunities, but there's also I feel like there's all this treasure of individual things that could get to getting better data faster, cheaper.
Andrew, could I ask you a question which occurred to me listening to what Ed had to say about the Lloyd's market, where the data to put a price on the risk is submitted in a very user unfriendly format, an analog format, and all these different underwriters very inefficiently key that into spreadsheets and do the same work on it. You could argue that they need some standards and so on, and this startup you referred to may be looking to address this problem. But does the insurance industry as a whole, Lloyd's is ostensibly a market, brokers bring risks into underwriters, underwriters write risk. It's meant to be a competitive marketplace, yet it doesn't seem to work that efficiently if what Ed is saying is correct. Do you see signs that the insurance industry is developing more efficient markets, if you like? And I'm talking about markets not just where risks are traded, but perhaps where information is traded as well. Would the industry benefit from that? And do you see those types of digital markets starting to develop, or have they developed already?
I think it comes back to the question around data and sharing of data, but you've obviously got things like the MIB, you've got the driver vehicle licensing centre in the UK, and it's about, if you like, sharing some of that information with insurers at a cost that they can afford to help them, if you like, process quotes, process claims. There's lots of different, I suppose, pieces of data that could be brought together to make the quote process a lot more simple.
So the DVLA could sell its data on an online marketplace to somebody who's prepared to buy that segment of it. Is that what you're thinking?
Yeah, and I think, whilst you can actually do that at the moment, you need a code. It's very difficult to get that code. It almost, you need the customer to give permission beforehand to be able to do it. And I think once you've achieved that, you could almost give your name and postcode, and most of the information you would need to price insurance risk, certainly from a proxy perspective, is there. And then you're into basically iterating the premium based on how, when, and where people drive using, as I say, GPS data from a sort of pattern AI perspective. So, you can actually cut a lot of these things out of the process. It's just getting the willingness, particularly with government agencies and things like that, to actually do it. And if you like, subscribe to the modern era. And there are lots of countries around the world that already do these things. I think sadly in the UK, we are a little bit behind in doing this. But yeah, we could take a lot of cost out and make lives a lot easier for a lot of people if we did integrate data. But it comes back to that trust question. And we've all heard the horror stories, and I won't name names, but people have done some pretty horrible things with data over the last few years. And I think it's just building trust with customers that it's being used for good and not for bad, and that they are appropriately compensated if something does go wrong. And it's used for some purpose that it should have been used for.
Yeah, it's been used for something their benefit to what they is valuable to them, if you like. And but you know, I think from what I can see is that data is the new oil. People say this all the time. That's where the value sits. So there is a reluctance, I feel, to hold on to that data and that insight and be very intelligent, rich. And you can see that in large organizations, really, like the NHS, for an example, where there's 264 silos of information on a single person, very intelligent in their own right, but nobody has yet thought about bringing that together around the patient's experience, if you like. So even within their own organizations, there's bureaucracy around and red tape, if you like, preventing the co-creation of models and propositions and bringing data sets together for more intelligent and better outcomes and efficiency. So I think people are still holding on to it. And yes, you have then the governance around that, which absolutely you have to manage very well. But it comes back to that customer engagement. If that's the driving force behind it, then I think businesses will start bleeding and dropping their boundaries, if you like, and doing it for the greater good. So to your point, Dominic, around will that shape markets? I think only when industries, large, the data holders, if you like, really starting coming on that journey, will we see that?
I think there's also cross-carrier trust considerations too, because I was part of some of those conversations where, being at a mega carrier, we were like, do we really want to help the up and comers capitalize on 100 plus years worth of insight? You have to have that question about there's the broader good, but is that good for me?
Do you see, Meredith, in the United States, markets starting to develop markets do exist in insurance risks, clearly, and they have done for some time, but they seem to operate relatively inefficiently and not in a particularly transparent way. Can you envisage a future in which there are transparent markets in risk, which can be actively traded during the day? Maybe they're markets in benefits from insurance policies as well, but also particularly, what we've just been talking about, a market in data. Is this something from which the industry could benefit if it develops securities market style, continuously traded markets in data, benefits, and risks?
Yeah, I believe so, and we're seeing it. I was talking with someone about this a few weeks ago. Of even in the past 5 years, the level of readiness to collaborate of, I'm mega carrier X and I, think I have the best of product ABC, but I could round myself out by adding product D. In the old days, mega carrier would scramble to stand that up because I needed to own and control it all. And you don't see that anymore. You see big carriers partnering with other big carriers, kind of realizing you really can't you can strive to be the best at everything, but it's not going to work. And your reputation, lean on what your reputation says you're the most amazing, and see if you can find the complementary entities out there that lead in those other areas where you don't, because then you win if you make that available to the customer. Like, the customer really doesn't care. Kind of the underwriting company sitting behind the scenes, they really don't. They care about the experience. They might, that's kind of interesting. Carrier X is selling me policy from carrier Y. That's interesting, but as long as it's giving me what I need in the way that I want it for the price I'm willing to pay, I'm happy. And my carrier gets credit for all of that. So we're starting to see that, but it's happening more kind of from the back working forward.
Mm-hmm. Now we're into our last few minutes. So I'd like to bring the discussion back to the question with which we began, how to make this InsurTech revolution actually happen. And Ed, maybe I could throw this question at you to start with. Do you consider the InsurTechs you're looking at to be ambitious enough, to be focusing on the right areas? Do you think they see themselves as long-term disruptors of the industry, or do they see themselves as carving out niches which they can sell to an established company? Is there enough going on among the InsurTechs themselves to be hopeful that they will eventually drive the changes which we've talked about here this afternoon?
Yeah, I think there's loads of great things going on. I mean, you only need to look at the number of InsurTech events that are going on and see a number of people turn up to see there's a lot going on in the space, and a lot of them are doing really well. I think I don't really see it as as disrupting the industry in that sense. I see it more of niches that they're all kind of, a lot of them are coming up with the niches that they need to solve, but it's such a big industry and there's so many problems to tackle that I think that's the right challenge. That's the right way. And ultimately, there's a lot of, you say, are they looking to be bought out? Yeah, I think a lot of them would like to be bought out by the big insurers or big brokers. And it's good to have that exit route because, if we look at, I mean, you said as an example of success, Lemonade earlier on. I think some may debate that. Obviously, they've done well to be the size they are, but they've not had the success perhaps that everyone was expecting a few years ago. But you look at the ones that have gone public, it seems like that's kind of not really a priority. And actually, like, a lot of them are perhaps going to be acquired by other big insurers who have massive balance sheets. But so there's a route for them to go out. But I think they're doing the right kind of thing. I think it's always be good to have more insurers that have innovative, open-minded people within them to experiment with new products, to make it easier for the InsurTechs to get on. One of the barriers to InsurTechs getting on, I mentioned earlier, was language, massive barrier, I think. But another one is like, as a startup trying to bring an innovative technology into a big insurer to streamline their processes or get better at something. Like, there are like a few people, who've got a great technology solution, and then you throw all this compliance, all this 500 question IT document, require them to have a modern slavery policy and all these other policies. It's like, well, it's like three people, they're like, and then they spend literally a whole person from their three people will spend 2 or 3 weeks just trying to do all the forms, and it's like crippling for some of them. There's also the slow no. We need to get rid of the slow no. Like, people bit dragged along. Like, leaders, empower your people to make decisions and do stuff. Let them experiment and fail if they need to, experiment and learn ideally. But yeah, there's things that we can improve, make it better. But I think InsurTechs are doing a great job. Otherwise, I wouldn't have joined Innovative Risk Labs to try and help them.
Craig, listening to Ed there, the hackneyed old phrase "insurance is sold, not bought" sounds completely inappropriate here, since insurance companies, from what Ed's just been describing, are very bad at selling what they do. They make the process very difficult. Indeed. Do you see from where you sit that actually the industry is starting to understand? And I think from everything I've heard this afternoon, I think it is that they're starting with the customer now rather than finishing with the customer, if you like.
Yeah, definitely starting to understand, and there's pockets of tactical initiatives, to what Ed was describing there, that quite niche tactical engagements going on where that can be proven. I completely agree with the bureaucracy and the slowness of adopting that technology. It's a major frustration, really. So, unless you can go through that kind of trusted partner route, it's really kind of tough to do that. So I think the industry is understanding. I think there's lots of R&D going on in elsewhere, in terms of the not being able to miss out, or to, mostly in consulting firms, to make sure that they're telling them, if you like, where they need to be in the X year state, and spending millions of pounds to come back to that understanding that that's kind of where we need to be and where we need to go. But I think it's not quick enough. I think it is a threat to the industry, but you can empathize with the pain. You can see the legacy challenges that they have. They can see how that's a noose around their neck. You can see there's other priorities that they need to do. So last conversation I had, I won't name the name of the customer, was, yep, we've got a 4-year transformation program. Nothing's coming in until we solve that. Right, okay, then you're going to get to that point and everything's going to change. So to your point, to Ed's point, how can you start building a culture of innovation really in your organization to trial these things? How can we start to use clever technology like RPA potentially to act like an API between legacy systems and to bridge that gap? It's not technically beautiful. Architects will destroy me for saying that, but it can provide the business with a mechanism to MVP and to try things out and fail fast, and to learn from that, then define the spec and rewrite that agenda. So, but they understand it, not there yet, long way to go, in my opinion.
Thanks, Craig. Meredith, can I read a quotation to you from Marshmallow, one of the InsurTechs which I looked at? And they said, "We realized the big insurers had lost sight of what they were here to do, to protect people when the worst happened." In other words, they took the view that the industry was operating from the wrong principles at the outset. A lot of what you've said this afternoon, I think, I don't misrepresent you when I say you would probably agree with that, would you?
I wouldn't agree that they've lost sight of the principles. I think they have lost sight of how to communicate that they get it. There's nothing like, when a disaster happens and watching, a 50,000 person organization rally. They get it. You don't work in this industry for the long haul if you don't get it, because it's hard. It's hard work. And you're altering people's lives, hopefully in the best way possible. But I think they have lost sight of staying connected to the customer for the customer to realize they get it. That's my take.
Mm-hmm. Andrew, a last word from you. We're in an industry now where we see InsurTechs paying claims without question, simply because that's actually cheaper than to investigate the thing in the first place. And obviously, to borrow a phrase I'm banned from using, delights the customer. Do you see an industry here which is undergoing a fundamental transformation, not just a digital one, but actually a cultural transformation, that it's about to completely revolutionize the way it does business?
I think they're starting to understand. Let's use that phrase, customer delight, a little bit better, I guess, than they ever have. And there's a lot of big carriers out there, Aviva and FU, certainly in the UK, that obviously make a thing about the fact that they pay 90% of claims, and repudiate very few. And I think the issue with that is it probably gives customers encouragement to go towards them if they are potentially a little bit fraudulent, because they can potentially get something through that they wouldn't get through elsewhere. But I think the message is a great one, and it is all about honesty. And I think as long as they're using technology behind the scenes to make sure that they aren't being exposed, and that, if you like, that great statement doesn't ultimately fall over and cost them a lot of money, I think it's definitely the way to go. I would encourage CEOs of large insurance companies to look around at the InsurTech world to see what's out there, because I think a lot of the problems that they're wrestling with internally, frankly, with large transformation programs that last 4 years, they don't look around and see what's there, because there are some very simple, very easily sort of introduced solutions that could save them a lot of that combined operating ratio very quickly.
Thank you, Andrew. Look up, look around. The solutions are out there. You don't have to invent them yourself. It's a very good note to end on. And I think we must stop there. I'd like to thank our panelists, Meredith Barnes-Cook from Usher, Andrew Bennett from Greater Than, Ed Gaze from IRL, and Craig John from Davies Group. Thank you also to you, our audience, for joining our discussion. Here at Future of Finance, our next event is now only 5 days away. And in a giant step towards a return to normality after the various lockdowns, it will be our first physical event since March 2020. Entitled Embrace the Digital Future or Die, we will be exploring with the asset management industry how they can transform their costs by embracing a whole new way of investing and servicing investments. It starts at 4 p.m. London time at the Walbrook Club in the City of London on Tuesday, 20th September. Do join us if you can.